Happy Friday, Anthony Special here with Big Energy Profits. Hope everyone's doing well. Just want to give you a brief market update, kind of let you know what's going on, recap on the week or so. So yesterday was a modest, to say the least, update for crude oil, and this was on the back of some economic stats. Things were positive. The March retail sales were up 9.8%, and on February, this made compounding February's, this makes 35% year over year, and unemployment also fell. So guys, there is some confidence returning, some demand returning. This is, again, what we talk about almost every day, supply and demand. Now, in China, their GDP growth grew 18.3%, a little shy of the analyst expectation at 19, but listen, we're splitting hairs here. We're not too far off. So China is showing strength in demand as well. And guys, this is really what what the market's looking to here. There is some slowdown in the vaccination distribution process in Europe, Brazil, India. There are still areas of the globe that are experiencing difficulties with vaccinating or achieving what we call herd immunity, and that will be achieved through a certain percentage of people becoming vaccinated. So there is that still on the table, guys. We cannot lose grip of what exists. I mean, there's an elephant in the room, and that is the COVID-19 pandemic and what that has brought to the market, for good and bad. I mean, we need to be very well aware of it, that it exists, and that it plays a valid role here. Here in the States, we are having some surging issues in Michigan. They are the CDC is beginning to recommend some shutdowns or lockdowns, whichever term you prefer to use. Also, we had some complications here with the Johnson & Johnson vaccine, similar to complications that were had in Europe with the AstraZeneca vaccine. So there are going to be bumps along the way, and it's just something we need to be prepared for. We need to stick to our trade plan, stick to the technicals, be aware of the fundamentals, and be disciplined in attacking this market in its best way possible. Now, from a purely technical standpoint, speaking of technicals, I believe the $62 to $63 area should absorb any selling pressure. If we get any drop days, any days that there is a presence of sellers rather, I believe the buyers will step in between that $62 to $63 area. I think that currently serves as a very firm floor for the WTI market. Now, looking forward, over the next couple days, couple weeks, we could go back to retesting that $65 area. So that's where we're positioned right now. We're positioned for that next leg up, and we have several positions here at Big Energy Profits to take advantage of this. We have some futures positions going on, some stock market positions going on, some option positions going on. So, guys, if you want to learn more how you can be positioned for this, we just had a home run trade go out, a super slam trade go out, and a handful of energy sector related trades go out, all of them optionable. So if you're not a futures or stock or ETF trader, you can certainly take this all to the options market, which I provide all that data for you. So there's a link below this video. If you click on it, you get to see my training webinar, learn more about myself, a little bit about my history, how I became to who I am today. And if you feel like I may be able to bring value to you, we would love to welcome you to the Big Energy Profits family. So, guys, with that, I wish you a blessed day, a wonderful weekend. I hope it's relaxing, and I will talk to you next week. Take care.